and welcome to the market update video with me, David Madden. We've seen a spike in volatility in the wake of the US inflation numbers. US CPI dropped to 8.5% from 9.1%. It was a larger decline than expected because economists were predicting a reading of 8.7%. And now that we've seen a bigger fall in the cost of living than expected, some traders are taking the view the Federal Reserve might not look to hike interest rates by 75 basis points next month. And with that, we've seen a broad rally in stock markets, in particular US tech stocks. And keep in mind, the Nasdaq 100 lost ground for the past 3 sessions. What we've seen in the US dollar is a broad sell-off. As I mentioned, traders are a bit less fearful that the Federal Reserve are going to be very hawkish next month, and as a result we're seeing a rise in Aussie dollar, in pound dollar, and a sharp move to the upside in euro dollar. Euro dollar has broken above 1.03 and it's gone on to hit a 1-month high. Oil has managed to kind of recoup some of the earlier losses it's seen in the session, thanks to the kind of overall optimism in markets.
The UT 100 moved sharply higher in the wake of the worse than expected US CPI numbers. Looking at the MACD indicator, we can see that momentum has swung from negative territory to just about being in positive territory, indicating that the bulls are marginally in control. Looking at the RSI, we can see it's moved higher, suggesting the price bias is to the upside. While the market continues to hold above these 3 simple moving averages, it's likely the recent upward trend will continue. A rally from here could see it retest 13,400. and a break beyond that could see a target 13,555. If the UT 100 fails to break above this zone here at 13,400, that could be an early indication that a change in trend is in the offing. If we do see a move to the downside of the market, it might find support from this zone here at 12,943, and a break below that could see target this region here at 12,800.
Turning our attention to gold. Gold, like other products, saw a surge in volatility when the CPI numbers were announced. The metal went on to actually hit a new 1-month high, largely driven by the fact that we saw a sharp sell-off in the US dollar. But gold has actually managed to retreat from its recent peak, and the metal is now largely flat on the session. It seems as if the overall risk-on mood in the markets has actually directed funds and directed attention away from lower risk assets such as gold. Hence why we're seeing gold trading in basically flat on the session.